Hello everyone, and welcome back to our weekly review and roundup of cryptocurrency markets on behalf of Apex Signals. My name's John Adam, and I do a lot of writing and general activity as well as investing myself in the cryptocurrency markets. We're a day late this week because there were a couple of things kicking off yesterday that I wanted to see how they would play out before coming and speaking today, and that was worthwhile, it seems, but unfortunately not for positive reasons. Over the last 24 hours, or less than 24 hours actually, we've had a significant downward turn in the overall markets. The graph here in front of us is the overall market cap of all the major cryptocurrencies, and we saw around 60 billion wiped off that between lunchtime yesterday and this morning. So we're down at around 310 billion dollars overall market cap. Seems only, I think it's 3 weeks ago that we were, might be 4 now, we were talking about how we were getting close to the 500 billion level again, whether we might break through that. So that's been a bit of a negative trend in the intervening period. And the last couple of times we've spoken, I was talking about how we've had a couple of weeks of relative calm within the extremely volatile context of cryptocurrency markets. That appears to be over now, and really the question is whether this may be a longer term bear market and we'll really see prices pushing back down to where they were before the big push up in late autumn last year, or whether we might recover. Hopefully that will be the case, and it will only be a temporary blip. There's been a couple of main triggers of the last couple of weeks that have led to this. I'll switch over to the Bitcoin chart now. Most of you have probably heard of the Mt. Gox exchange, which closed down several years ago now, and that happened because of a major hack that led to a lot of clients that had wallets hosted on the exchange losing a lot of Bitcoin holdings, and the exchange was shut down after that. It went bankrupt, and the administrators who were appointed to deal with that bankruptcy, or the trustees, have recently cashed in a large holding of Bitcoins. Now they're responsible for paying back the individuals and companies that the exchange owes money to, and they were sitting on a relatively significant pile of Bitcoin, and it was their job to choose the moment, or the moments rather, because it doesn't all happen at once, and they have to spread the risk of cashing that in, and releasing funds to pay creditors back. Now a big chunk of Bitcoin was recently liquidized from that, and that's pulled down Bitcoin prices for two main reasons. The first is the obvious reason that that increased supply significantly in comparison to demand for a while. It was a relatively large holding, so it had an impact on overall supply, and of course, as with any tradable asset, that has an impact on prices. And the other reason was that markets have interpreted the timing as indicating that the trustees possibly don't have a lot of optimism in terms of price direction, at least in the medium term, and decided that it was better to cash in now rather than wait another month, 2 months, 3 months, and potentially see prices slide further. So that was interpreted as a pessimistic outlook, and obviously other holders have decided to follow suit and take the implied advice that the market is looking uncertain in the near future. And we actually dipped below 8,000 for the first time in a while this morning, down to around $7,850 for Bitcoin, and that's quite a drop from the high of $11,600 that we saw earlier this month. So we'll see how long this continues. It might be a blip. We've already seen a bit of a recovery this morning. So hopefully over the next few days that will take hold and we'll move back up. But there is a reasonable chance that we could be entering into a downward phase, and hopefully that won't take us back to below levels that we saw towards the end of or the beginning of autumn last year, before we had the big bull run towards the end of the year. So other than Bitcoin, if we have a quick look here at Ethereum, we've also seen a fair bit of value lost here, and that was down this morning at $590, and on Monday we were at $737 per Ethereum, so that's been a pretty steep downward curve as well. I think Ethereum's been slightly less volatile than the other cryptocurrencies recently, and that's been put down to, and I've put it down to myself, the fact that use of the platform is picking up. It's a utility cryptocurrency, so it's used to pay for use of the Ethereum platform, and I think long term I have a lot of faith in Ethereum, but as we've seen recently, the cryptocurrencies tend to move in together. When Bitcoin drops significantly, the rest all drop as well. And I'm very much looking forward to the day where we don't have quite the same extent of correlation, because there's no real need for the different cryptocurrencies to be quite so tightly correlated as they are. They all have their individual future destinies, but at the moment it's still very much a herd mentality in the market, and of course that's the case across financial markets, but it's particularly pronounced in cryptocurrency markets at the moment. And finally, let's have a quick look at what Ripple is doing. We can see here that they also dropped over the last 24 hours. However, the recovery was much more pronounced this morning, and we can see here on the right of the chart that there was a steeper upwards curve for Ripple. Ripple's taken a bit of a battering this year. Personally, it's one of my bets. I think the fact that they're integrated with financial systems gives them a good chance, and the CEO Brad Garlinghouse has been coming out with some interesting comments recently. He was over in Asia for a major conference and speaking to Bloomberg Asia, and came out with some sound bites which have been picked up by the press. And one that I like is his comparison of Bitcoin to Napster. Now, maybe some of the younger people out there won't be so familiar with Napster, but Napster was a predecessor to Spotify and the big established music streaming services that we have today. It was a peer-to-peer file sharing system, and it basically launched digital music streaming. However, it very quickly, or relatively quickly, became defunct. Part of the problem was it wasn't really paying royalties, and it was infringing on copyright rules and so on. So again, there was regulatory issues around Napster, and it was eventually replaced by more mature technologies that had a little bit more respect for the authorities and regulation. And I think what Garlinghouse was saying is, what he was saying specifically was that while Bitcoin may be the pace setter or the poster boy of the cryptocurrencies market, it could well be replaced by more mature alternatives as years go by, and maybe its big role will really have been setting up the cryptocurrency market and bringing it into reality. But whether the long-term outlook is one that will be dominated by Bitcoin is very much open to question. Obviously, he has very specific interests within that. Ripple sees itself as a direct competitor of Bitcoin. It considers itself more accountable and more in keeping with realism in terms of gaining traction. The fact that it is cooperating with mainstream finance, and you have more solid know your client protocols on both ends of transactions. And I personally think he might be right. I hope he's not completely right, but I think there's definitely a kernel of logic to that, and we'll see what happens in the future. But I've always said that I think that there's huge doubt whether any of the big cryptocurrencies that we see now will still be there 10 years from now, or even 5 years from now, or whether they'll be replaced by other options. I think what will probably happen is somewhere in between, where some of the early pace setters will adapt to whatever's going on, and they'll establish themselves. They'll take advantage of that first to market plus that they have, and they'll go on to become major players longer term. I think others will be overtaken, and they won't adapt to the future needs as well. And sometimes being big and can lead to a little bit of apathy and overconfidence. So we'll see whether that turns out to be an astute forecast for Bitcoin or not. Okay, that's all the time we have for today. We've gone over 10 minutes again. I'll try and be more concise next week, and hopefully we'll have seen a recovery, and I hope I won't be speaking about a more intense bear market 7 days from now, or 6 days, because we will go back to our normal slot next week unless there's any particular reason not to. Enjoy your trading. It was good speaking, and see you all soon. Bye for now.